Today, I will backtest the day trading strategy that is renowned as the best beginner strategy by DataTrader, which supposedly can be used with zero experience just by disciplinedly following the strict rules. This strategy utilizes two free indicators, the 50 EMA for trend detection and the chandelier stop for precise stop loss placement. DataTrader tested this strategy on the AUDJPY 4-hour chart, and it delivered a solid 65% win rate, winning 21 out of 32 trades, spanning from 2020 to 2024. While those results are not bad, waiting hours or even days for a setup isn't ideal for everyone. That's why I will be putting a twist on this idea, testing it on the 5-minute time frame as a scalping strategy. For this backtest, I will use the EUR-USD pair since it has the lowest spreads in the forex market, making it perfect for scalping. I'll take 100 trades, risking 1% per trade with a 2-to-1 risk-to-reward ratio and starting with a $1,000 account. So without wasting any more time, let's find out if this approach can improve this strategy. Let's head over to tradingview.com and set up the two free indicators. When you're there, click on the Indicators tab and type EMA. Click on Exponential Moving Average. Click on the indicator settings and set the length to 50. Then go to the Style tab and adjust the EMA's band width and color so it's easier to see. This indicator, as many of you already know, smooths the price to help us identify the market trend more easily by ignoring market noise. Next, go to the Indicators tab and search for Chandelier Stop and click the one by Pip Charlie. We will keep the default settings for this one. This indicator automates the placement of stop loss levels by tracking the ATR. Also, another important improvement is that we will not be trading during the Asian session because market volatility is much lower during that time, resulting in less trending prices and higher spreads and commissions. For simplicity, I'll add a third indicator for that called Kill Zones by Oscarves. In this indicator, the red color signifies the Asian session, so we will know when to avoid taking trades. With everything in place, we're ready to move on to the rules of this strategy. Here's how the setup works. For a long trade, the price must break above the 50 EMA, with a candle clearly closing above it. Wait for at least 2 consecutive bearish candles after the breakout. Place a horizontal line at the swing high before the pullback and enter when a candle closes above this line. Place your stop loss at the level indicated by the chandelier stop. Target 2 times your stop loss distance to keep risk management simple. For a short trade, the price must break below the 50 EMA with a candle closing below it. Wait for at least 2 consecutive bullish candles after the breakout. Place a horizontal line at the swing low before the pullback and enter when a candle closes below this line. Use the chandelier stop to set your stop loss. Again, target 2 times your stop loss distance for a 2-to-1 risk to reward ratio. Now that you understand the idea of the strategy, even with these conditions met, you might still face many poor setups. That's why there will be 2 main trade invalidation rules. First, when we get a pullback, but the price breaks the 50 EMA again. This means when the price breaks the 50 EMA, initiates a pullback with 2 consecutive candles, but then, before completing the full setup, breaks the 50 EMA again, we won't be taking the trade because at that point the pullback is too deep. Second, when the breakout candle is much bigger than the average candle. If the breakout candle is 2 or 3 times larger than the average candle, it suggests the breakout is unsustainable and that the price may reverse. Now let's look at some more buy and sell examples. Here we see a possible buy setup. The price breaks above the 50 EMA with a candle clearly closing above it. Let's wait for at least 2 consecutive bearish candles. Here they are. Place a horizontal line at the swing high before the pullback and enter when a candle closes above this line. We have our entry. Let's place the stop loss at the level indicated by the chandelier stop. Target 2 times your stop loss distance. Now for a sell setup. The price breaks below the 50 EMA with the candle body closing below it. Let's wait for at least 2 consecutive bullish candles. Here they are. Place a horizontal line at the swing low before the pullback and prepare to enter when a candle closes below this line. Here's our entry. Let's place the stop loss at the level indicated by the chandelier stop. Target 2 times your stop loss distance. Hopefully those examples made everything clear. Now let's start backtesting. In this backtest, I analysed 100 trades on the EUR USD 5-minute chart from mid-2022 to the current date with these strict rules, risking 1% of the account balance per trade and exiting at a 2% gain, sticking to the required criteria, keeping in mind the 2 invalidation rules, avoiding trades during the Asian session. Here's how the strategy performed. The strategy achieved a 61% win rate, slightly below the claimed 65%, but still impressive. With a 2-to-1 RR, winning trades delivered 2% account growth, while losing trades reduced the balance by 1%. The net gain from 100 trades was 83%, bringing the account balance to $1,830, starting from $1,000. This strategy proved flexible enough to adapt to lower time frames, with consistent results of a 61% win rate and nearly 83% account growth over 100 trades. While swing trading on higher time frames can offer slightly better results due to reduced noise, scalping on lower time frames like the 5-minute chart provides more frequent setups and faster feedback, making it ideal for traders who are actively learning. If you're looking for a straightforward strategy to try, I think this one is a great starting point. I encourage you to backtest and future test it on a demo account yourself. Doing so will give you much more confidence in trading and significantly reduce psychological challenges. Let me know in the comments if you've used it or plan to test it yourself. When you do, make sure to comment on your results or improvements to the strategy. If you want me to try and improve this strategy in any way, comment improve. Don't forget to like, subscribe, and turn on notifications for more strategy reviews. Until next time, good luck.